Let me invite the first management on the show today. That's Paras Defence. The stock has gained 43% in the last 1 year. In a recent note, Nirmal Bang has said, with the government pushing for more Make in India, there is more headroom for revenue generation. To discuss the outlook on railway heavy engineering business, we've got Amit Mahajan, Director Technical R&D at Paras Defence and Space Technologies, joining in. Thank you very much for joining in. This is Reema here. Can you talk about the order accretion that the company has seen in this Jan to March quarter, and what does it take your order book to and the pipeline going ahead?
Good morning, Reema. Firstly, thank you for having me over. I cannot divulge absolute numbers because I'm in a silent zone. But the order book has been, if you see for Paras Defence and for that matter, all Indian manufacturing companies, has been doubling up year on year. I would want to maintain an order book of 2.5 to 3 times of my revenue, which has been very, very healthy. This sector has never seen something like this. And this is the effect of the snowball effect of, all the indigenization that we talk about.
So can you give us, some sort of ballpark band on the margin front as well? Your cost of materials has gone up quite a bit actually, so that's hit your margins a bit. I mean, it's still at around 22% or so, but it's far off from, 27, 28% used to enjoy a couple of years ago. Can you tell us what is the outlook on margins in the next 1 to 2 years?
So, look at Paras Defence, or for that matter, any defense company as a yearly basis, not on a quarterly basis. So if you look at the yearly margins, they are going to be sustainable. The revenues will grow steadily, and the opportunity that is lying in front of us is humongous. As we speak, and I'm telling you, 2.5 or three times the revenue is the order book I have. But at the same time, my opportunity is almost 10x. So that's something that we need to be focusing on. That is the kind of businesses I'm looking to envisage coming my way in the next few months to come. So revenues, margins, they will all be on the upward side.
Okay, got it. So you're focusing more on the opportunity and less on profitability at this point in time. Understood. Can you tell us what exactly is the order book that you're sitting on right now? And what is the kind of order visibility? What is the execution that you're staring at over the next 1 to 2 years?
So order book right now is in excess of 600 crores, like I mentioned, and we retain that. And execution capability, like I'm telling you, even in this quarter, in the quarter to come, we will book sizable orders and we will maintain 2.5, 3x of our revenue when it comes to order book. The execution capability, we need not augment our capabilities because our capabilities are extremely scalable, and we should be able to sustain revenue growth for the next 5 years.
Amit, hi, morning. So, the size of the opportunity is large, and that is true for all defense companies, as you said, right? There's a big localization effort which is going on. So, so the orders are, the pipeline is strong and it'll perhaps remain strong, but it's about execution, right? Give us some sense. I think the last time we spoke, you said this year numbers should be up between 30 and 40%. Without being very specific, since you said you're in the silent period, talk to us about whether you'll end up in that ballpark. What are the expectations in terms of executions, revenues you will book in FY25? Growth would suffice. Go on.
So Paras Defence is a project-oriented company, I always maintain. From there, we are migrating from a component or a subsystem manufacturer company to a large system manufacturing company. The revenue execution capabilities do not change, or they are much, much scalable. But what can happen here is 10, 15, 20% plus or 10, 15, 20% lower. The growth is sustainable. There will be growth. How much percentage? That's something which year on year, maybe this year if I do something, next year does not become a yardstick for my growth that way. Say, I will give an example. One product which I'm making, submarine periscope, is a very high value when it comes to the percentage of it with respect to the revenue of Paras Defence. So if I have to deliver, say, a periscope in March, but for some operational reasons, I have to deliver it in April, a large chunk of my revenues get shifted to the next financial year. So these things are a part and parcel of the business and should be looked at in a larger gamut of things. The order book and the opportunity I would always want to focus on. The capability to execute these orders are well stocked up with margins for growth for the next 5 years. So I don't see a growth percentage should be focused on.
Okay. No, I mean, growth. So, no, that's why I said, I mean, it's a 30 to 40 is a wide range, right? So is that broadly, roughly what we should look at?
I would widen that range depending on year to year. I may say that this year it can be around that, or I don't want to put figures there, right? But
Right.
next year can be higher than that. Subsequent year can be lower than that. But what yardstick we should look at is the
Sure.
kind of opportunities that we're going.
Got it. Now, Ajay,
When,
just,
when I'm saying this,
yeah.
I will still maintain that whatever happens, we sustain our profitability. That's important.
Okay, so give us a number. What will that profitability number be? Margins, which you hope to sustain. And second, just identify two or three, Amit, two or three areas. You said that the periscope. Without going into too much detail, what are you focused on? Some of the products that will give you visibility, which give you visibility and confidence for order book to remain very strong. Go on.
So we have two primary verticals of our company, optics and optronic system, that will lead our revenues at all times because that is the most profitable business that we do. The second is defense engineering, gives us the run rate or the flexibility of cash flow. So both these businesses do 50% right now. The profits are mainly driven by the optics division. I would want to maintain optics as my front line because here, what we do in certain segments in defense or in space, nobody else in the country does. So I would want to retain that position of mine. I would want to focus on optics and optronic systems. Said that, electromagnetics, so we are into electromagnetic pulse protection. Now, this is a domain again where we don't have much competition and we would want to also grow in this particular area. Defense electronics is growing by its own virtue because we are there in almost all the programs in the defense sector. So all in all, if you see, I would want to focus on optics, optronic systems. I would want to focus on electromagnetics. I would want to focus on defense electronics. And then our subsidiaries kick in. So the drones and the anti-drone systems. Anti-drone system is slated to become very, very big in the coming months to come. So I would want to focus on these 4 or 5 areas.
Okay. Amit, just a quick word. On 5th of April, ICRA downgraded your outlook to a negative from a stable. The rating is reaffirmed, but the outlook has been downgraded to a negative, and that's based on the deterioration in your operating margins, the decline that we've seen. And here they're saying is that the contribution of optics has gone down, while the contribution of the lower margin defense engineering has gone up. So, talk to us a little bit about that. And two, the increase in working capital, capital intensity, there is a stretch in your receivables, and that has moderated your liquidity position. So can you talk about this receivables that you have, your liquidity position, and has there been a deterioration, and are you looking to change that?
So I would again always come to the same point that Paras Defense should, or for that matter, any defense manufacturing company should not be looked at on a quarterly basis. Couple of quarters where my defense engineering, because my defense engineering turnaround times are much faster, like I mentioned before. So if they give a revenue in a particular quarter, my profitability may look on the face of it lower than otherwise. But as I end the year, my consolidation happens on my profitability and I land up sustaining my last year's profitability. So quarter on quarter basis, if somebody is going to rate us, then yes, there is going to be a fluctuation. ICRA today downgraded the outlook from positive to negative. But maybe in the next couple of months, they will not just upgrade the outlook, but they may land up giving us a better rating. So this is where the business has to be understood that it is not on quarterly basis, it's on a yearly basis.
And what about the receivables, the deterioration in working capital and liquidity?
Again, they are seasonal, right? So at the end of the year, am I bettering my working capital cycles? Am I reducing my days? This is something which I target on a yearly basis, not on a quarter basis.
Got it. Amit, we leave it at that. Thanks a lot for joining in and, sharing your thoughts with us on the business, the way forward, and of course the order book picture as well.